The market consolidates under resistance. Is it bye-bye bully? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that the market was competing against itself with a three-wave move to the upside and a three-wave move to the downside. I gave the benefit of the doubt to the bulls based on the MACD and the NASDAQ, but they were unable to hold and the market moved down. We consolidated and chopped the rest of the day, and now the question is, how low can we go? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, with the market moving down further and the NASDAQ breaking its pivot, we have some changes in the count. So let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And in yesterday's video, I noted that if they didn't bounce here and they came back down, that would look more bearish, even though we were leaning bullish at the end of the day yesterday, given the NASDAQ and the MACD. But they did not push out of here. In fact, they collapsed it down to give us 5 down, and then they consolidated up. Now, we can get one more 4-5 here where they keep it under 44.71 and then come back down to complete the move in the 45.25 to 4,500 area, and then back up in a three-wave play from there. But overall, this is a bearish look to the downside, okay, at least in the short term, as a bigger ABC. Now, I know there's been some flip-flopping lately on the count, and the reason is we have not had a clear structure in either direction. I told you yesterday that I really hated this move. It's a three-wave move and has to be counted as a diagonal, and I really hated this move off of the high. It's also a three-wave move. So you had competing issues in the Elliott Wave counts, and sometimes that happens. That's part of any indicator. They're not perfect. And when those things happen, you kind of have to step back. You don't want to be trading that aggressively and look for the pattern to play out and what setups you can get. So as it pulled back and broke the pivot, okay, it told us that this was not going to be an impulsive move to the upside, which makes sense given this A wave up or this three-wave move up. But we did give them the benefit of the doubt as a possible diagonal, and that's still possible at this time, but it will not be the primary count, as I do not count on diagonals to play out. And with the 4-5 here, it does look much better as a 5-wave count again, even though I don't like the top. So again, our primary count, guys, is going to be one of two things. They're both the same basic thing. The issue is, do we get one more push down for a 4-5 overall? And what I mean by that is this would be 3 of 3 to the downside. 4 of 3 was the high on Wednesday's close. 5 of 3 was the open yesterday. And then we'd get another wave 4 that stays under 44.71. That's critical because of corrective depth theory. And then you'd look for the move down into the 44.25, 4,400 area to complete a bigger 4-5, which would make this look even better as a C wave move down. But if they don't do that, we would expect an ABC up into the 45.90 to 45.22 area. These targets would move down if the market moves down as well. Now, what happens if we see a direct sell-off from here and they just start racing to the downside because they break bigger support? In that case, it looks much more like this red ABC and not the bigger C wave down. And that is because you would not expect this move to disregard the 0.5 and the 0.618 fibs on the way down. When that happens, it's much more commonly a C wave, and it would target the 42.61 area. Now, from here, we can see a wave 2, 3, 4, and 5 down to that 42.61 area to give us the red C wave of this count. Okay, but if they do push down further toward that 4,400 area to hit the 0.5 extension, that is a much more common wave 1 of 3, which would make this 1 of C and this 2 of C. But again, I have trouble with that because this is a 3-wave move. So there's a lot of overlapping moves or lack of follow-through on these moves. And because of that, it's a corrective structure. Now, corrective structures favor the bears because corrective structures usually resolve lower. And if they're going to resolve lower, we would look for that 42.61 area. For the bulls, they would be looking to finish this diagonal to the upside, where you've got a wave 1, a wave 2, a wave 3, 4, and 5 to the upside towards the 44.60 area. And this wave 5 would be an ABC because it is a diagonal, so you would look for a really strong move in A back toward the highs, a B wave down, and then a C wave up towards 4,600 or so. This is not the primary count. with the breakdown of the NASDAQ pivot as well as the 4-5 move here, I do believe it is less likely we are going to see that play out, and it is more likely we will see the 4261 area overall. Just a question of, do we make a quick low and then a bounce, or do we make a quick bounce and then a low and then move down from there? Okay, so a little bit of uncertainty overall, but I do favor the bears right now because of the overall corrective structures we're looking at. You did not get anything impulsive to the upside, which is what the bulls would be looking for to go back towards all-time highs. And if they don't have that, then generally we resolve lower. Over on the NASDAQ, now the NASDAQ has issues for different reasons. We actually have a pretty solid 5 waves moves down on the NASDAQ, and then you have a pretty solid ABC up. The issue I have is this is a pretty clear 3-wave move here. That doesn't mean it can't be impulsive. We can get diagonals to the downside, okay, but that first move off of the high so far was 3 waves, and so it does make it harder to accept that this can be one of 3 down on the big picture. But NASDAQ is a lot cleaner than ES in that regard. So with the break of the pivot on the NASDAQ, that 15,241 area did break, and then they bounced back up to test it. We have the same issue or look where NASDAQ still kind of needs a 4 or 5 here. They've got the 4, they need a 5 down to kind of complete this move, and that would be in conjunction with ES doing the same thing. So this move up would be wave 4, and then you'd look for 5, and NASDAQ doesn't really have a good 4 or 5 here. It's okay, it's not great, but that is what you would look for to make this look a lot better for the bears. If the bulls are going to push back up, they need to push back up over the 15,400 area, this high that they made on Wednesday at the close. If they can get back above that, then it would look much more like we're in a wave 2 bounce up toward the 15,408 to 15,541 area. Then we'd look for overall wave 3, 4, and 5 to resolve down in the 14,213 area. This area becomes very important for the bulls on the NASDAQ as well. If this area breaks and 14,000 breaks, then the bulls have a bad time and the market's going to have a bad time. So overall, we're looking at downward pressure in both markets. The question is it impulsive or is it a bigger ABC that will be a wave 4, and then we'll look for the bulls to buy there and push higher off of that level. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial because I want you to get in there and make sure you love it and become part of the trading team before you ever spend a penny. You can cancel at any time. We also have our Elliott Wave for Beginners online course. As you can see from the testimonials on the screen, it helps real traders make real money and finally understand how the market works, where the pivot points are, where the failure points are, and how to use Elliott Wave to make money instead of trying to read the news cycles and being confused. It's very hard to understand why we get bad news and the market goes up and we get good news and the market goes down. Elliott Wave breaks that down for you and helps you understand where the key levels in the market are. It is 25 videos where I go over 3 different parts. The first part is the introduction, where we go over expectations, mindset and emotion, the KISS theory, and why Elliott Wave works. The second part is the chart setup and tools, where I go through every single tool you need to put on your chart to confirm when Elliott Wave patterns are playing out and when you're seeing tops and bottoms. And finally, the Elliott Wave for Beginners course. In this course, I go over all the waves. We're looking at waves 1 through 5 and break them down, what their targets are, what their failure points are, what they look like when they fail, what they look like when they hit their targets, all the different things you would want to know about the market so that you can effectively trade and understand the market. The really cool thing, guys, is it is included in both monthly rooms. So if you don't want to buy the course and you do want to join my monthly room, the course is included for free. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts and what to expect, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are interested in day trading, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as day trading, individual stocks, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades that's so unique. Something you really need to see to understand. And that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. Okay, the key takeaways for today. Bears need to keep it under 44.71 and push down for a wave 5, and then we'd look for an ABC up. Bulls would look for an ABC up and a attempt to break 45.22 if the diagonal is going to play out. If they do move directly down, it is much more likely we are in that C wave towards 42.61 in a direct fashion. Over on the NASDAQ, Bears want to keep it under 13,400 or 15,400. If they can keep it under 15,400, we would look for another wave down to complete this move off the top, then look for a wave 2 bounce, and then continuation to the downside toward the 14,200 level. At that time, it's going to be critical on both charts for the bulls to hold. Guys, it's the weekend. Grab yourself a drink, enjoy your family, get away from the computer, and I will talk to you next week.